When it comes to trading, timing your entry can feel like everything, right? Well, today we're going to break down a really powerful strategy designed to help you pinpoint those exact moments. It's called MHV, or Market Loses Volume. And by the end of this, you're going to have a clear, step-by-step plan to turn these charts into a strategy you can actually use.
You know the feeling? You see a huge move on the chart and you just know you messed it. Or worse, you're just frozen, not knowing when it's safe to jump in. It's probably one of the most frustrating parts of trading. And that is the exact problem this MHV strategy is built to solve.
The name Market Loses Volume really tells you everything. What we're doing is hunting for that exact moment when a big, strong trend, up or down, doesn't matter, starts to run out of gas. You know, when the momentum just fizzles out. That little pause is often a golden opportunity, a high probability spot to get in for a reversal or a nice pullback.
Okay, so here's our game plan. First, we'll cover what MHV trading actually is. Then, we'll get into the fun part, how to spot the setup on a chart. After that, we'll talk about how to pull the trigger and execute your entry, how to manage the trade once you're in, and finally, we'll wrap up with the key rules and the mindset you need for success.
All right, let's get down to it. Spotting the MHV pattern really just comes down to 3 simple visual steps on your chart. Let's walk through them one by one.
Okay, step 1 is all about finding what the strategy calls an extreme condition. See those blue lines on the chart? Those are Bollinger Bands. Now, look inside that white circle. See how that one candle has pushed completely outside the top band? That's our signal. It's the market basically screaming, hey, I'm overstretched here. And that's the first clue that momentum could be about to shift. Now, this next step is where the precision comes in, and it's super important. During that extreme move, you need to find the highest candle's body if you're looking for a sell. Not the wick, the body. That exact level is your critical price point.
And for the final step of the setup, you just draw a horizontal line right at the level of that candle body. That is it. That line you just drew is your MHV line. It marks the exact spot where the buyers ran out of steam, where the market lost volume. Now, that line becomes your personal, high-probability entry zone.
So, you've done the hard work. You found the setup, you drew your line, but now what? Now comes the part that really matters, execution. How do you actually turn that line into a profitable trade? Well, as you're about to see, timing is absolutely everything. So here's the trick, and it's all about patience. Once your line is on the chart, you don't just jump in right away. You have to wait. You wait for the price to come all the way back and touch or retest that MHV line you drew. That retest, that's your green light. Now this is a pro-level technique right here, multi-timeframe analysis. So look, on the left, you spot the big picture MHV setup on, say, a 4-hour chart. But you don't enter there. Instead, you zoom in, like we see on the right, to a smaller time frame, maybe the 1-hour or even 15-minute, and you wait for the price to hit that exact same line. This lets you get in with so much more precision and way less risk. It's a game changer.
So, you've got a couple of ways to get in. If you can't be glued to your screen, you can set a pending order right at your MHV line and it'll trigger automatically. Or you can watch it happen live and enter manually when the price hits, giving you a bit more control. The source even says that once you get confident with this, you can enter the second it touches the line, without even waiting for a candle to close.
Look, finding a great entry is awesome, but it's only half the job. Now we've got to talk about the single most important part of any trading strategy, how you manage your risk and protect your money.
The source gives us 2 really clear rules for getting out of a trade. The first is your stop loss. That's your safety net. The source gives an example of 20 to 30 pips, but that really depends on your own risk tolerance. The second rule is an active one. If the price breaks through your MHV line and a candle actually closes outside the opposite Bollinger Band, the setup is busted. You don't wait, you don't hope, you cut the trade right then and there.
Okay, we've covered the X's and O's, but trading any system well is about more than just the technicals. It requires the right mindset. So let's dig into the core rules that make the MHV strategy work in the long run.
If you take away just one thing today, please let it be this: patience, patience, patience. The source says it 3 times for a reason. You absolutely must have the discipline to wait for that perfect A+ setup. Don't chase the market. Let it come to you and your MHV line.
Here are a few technical tips to help stack the odds in your favor. First, always try to trade with the main big picture trend. Second, if you're looking for a buy setup, it's a great sign if the Bollinger Bands are starting to go flat or sideways. That shows the downward push is losing steam. And good news, this works on pretty much any currency pair or time frame. You can also see the recommended settings for other helpful indicators on the screen.
And this right here gets to the heart of what makes or breaks a trader. Guard your money management. The source puts it so well. If you manage your risk properly, you can take 10 small losses and it's no big deal. But without it, a tiny 10-pip move against you feels catastrophic, and you start making emotional, panicked decisions.
So how do you actually start doing this? Please follow this simple path. Step 1, open a demo account. Do not risk a single cent of real money. Just practice. Practice finding the setups, placing the trades, managing them. Do it over and over until you know this system inside and out. And only then, once you really get it, should you even think about trading with a live account.
I want to leave you with this last piece of advice from the source material because it's just so powerful. It's a reminder to respect your money. Trading isn't a casino. Don't just throw your money away and donate it to brokers through sloppy trades. Value it.
So there you have it, the complete blueprint for the MHV strategy. We've gone from spotting the pattern to placing the trade to managing your risk. The system itself is logical and straightforward. So the final question really isn't about the strategy, it's about you. Do you have the discipline and, more than anything, the patience to wait for your shot and execute it properly?